Hi guys, welcome back to the Market Monitor. Let's start by discussing today's market action. So the day started with a very big gap down. If I was to open the 1 minute chart of the small cap index, it is very clear that the day opened with a gap down. So I think it was something negative 2.1% or something, and then we saw a very quick recovery in the market. Now, the gap down was due to the Israel-Iran war, and it is quite obvious that the Indian markets recovered quite quickly because there's no sort of significance for the Indian markets compared to Israel-Iran war, right? So it was kind of expected, but at the same time, this is very good action. So what's happened here is that we've tested the 5-day, broken it, tested the 10-day, broken it, and now we've taken support from the 20-day moving average. The thing that's very important here is that we consolidate now. We show some up days, consolidate for maybe 3-4 days here, and then continue the up move. What happens then is that slowly the 50-day will start catching up with the 200-day, and then the next up leg can be very furious. It can be better than what we've seen in the past 2 weeks, right? Because then you're entering a golden cross in the small cap index as well, and then you're on for a big rally. So that's how I expect the market to play out, but well, the market can always do its own thing. We'll keep today's video quite short because there's not really a lot to discuss. As you know, the holdings are not like I have zero holdings. All of these don't need to be here. Yeah, so I have zero holdings. I'm not holding any stocks right now because there is nothing to do in the market. Like I said, in these red zones, I just don't want to be a part of the market. I'm happy sitting out. I'm happy, doing nothing, just revising the work, reading on some other books, working on the other sides of my personality, on the other sides of my life, right? In such zones, I'm out of the market. The moment you give me a green zone, I'll come right back in, but for now, I'm out. So if we go back to the candlestick charts, and I have actually done the scanning for today, and we'll go through some charts as well, but the market overall is now in a pause zone. This is 100% cash zone. Nothing has to be done. There's no need to take any trades here, but there are some sectors that are showing strength. So for example, Force Motors, right? We can see the relative strength here. Lumax Autotech, we can see the relative strength. Subros Limited, we can see the strength. SJS Enterprises, we can see the relative strength. So this is all from the auto and auto ancillaries sector. So I have a feeling somewhere that maybe the auto sector could be one of the leaders for the next up leg. I might be wrong, and time will tell, and we'll position ourselves according to that. But it's feeling like this. Like if we see today the action in SJS Enterprises, right? You're seeing a buying of 36 crores compared to an average volume of 18 crores and a gap up over here for some catalyst. I need to find the news reasons, but a gap up as well. So there's quite clear action in this auto space. Even if we look at Force Motors recently, it's been doing quite decently. Apart from the auto space, I also am really liking pharma, right? And I'll tell you the reason why. So Eris Life Sciences, again, breaking out of the base over here and then going on to new highs. Syncom Formula, right? So this is a very interesting setup. What I want here is that you consolidate a bit more. Let this 50-day catch up with the 200-day, and then we're on for a big move. It has a high ADR of 5.5%. It's a 20% stock, right? The only thing that's a bit iffy here is the volume. The volume's a little low, but we've seen in the past, I have traded the stock myself over here in this up run, and we've seen that it has the ability to show those big moves. So that's what I'm liking in SimConf. Star Pharma is amazing. Well, this like Strides is just amazingly showing its strength. Good average volume as well. AstraZeneca as well, and Wockhardt. Wockhardt might be a leader. I have a feeling, because I've always noticed that Wockhardt does quite well. Like even over here, right, in this rally, comes out of the it's in a 5% circuit, picture perfect VCP setup. Let's go back here. Yeah, so picture perfect VCP setup. You're making a pivot and you're moving. So an inside day here, you move out, right? You're still in the 5% circuit, and then suddenly you get into a 20% circuit and you're just blasting. So Wockhardt Pharma has been one of the leaders of the pharma space in the sense of the pharma names that are not very large, right? Which are not in the FNO space. And then Blue Jet Healthcare as well, Shilpa Medicare as well. So there are a lot of names that have strength, but let's see how they play out. Another name I want to see is JM Financial. I've not had a look at this. Okay. not very nice. This gap down is not very nice, but let's see, maybe you show the strength, come back up to these levels, to 150 levels, and then consolidate for some time, and maybe there's a chance in you. And then by the time the 50-day also comes up to the 200-day, so yeah, could be on. This is another setup that I'm really liking, Cholamandalam Finance. This is a very high priority stock for me. I think that this could be a good winner in the finance space. The only issue I see here is that the ADR is quite low, so the average moves are not going to be that big, right? But again, I think it's too early to call anything right now. 63 Moons is also a really nice stock, recently put into the 10% circuit bracket, so it's looking good. But I still feel like it's a bit too early to call anything right now. I think the importance right now has to be more so on just staying in cash, going through your previous holdings, see what you could have done better. This is a very nice stock, Shankara. I'm liking it. Recently it's like given a clear change of characteristic. So if we have a look right over here, it's still a little bit of a choppy setup, not very clean, but now you can see up, pause, up, pause. So let's see how this pause does. Now it might be a little extended, but again, I feel like it's riding its 5-day, then it takes support from its 10-day, then again now you're riding the 5-day, so maybe wait for the 10-day to catch up. But again, it's the same concept that it's too early to call anything right now. Let's just give it some time. Let's see how the market is setting up, and maybe then next week, a few days into next week, we'll have more idea. Like Nava is also looking like a good stock, a good chart. TI as well, right? With the action in SDBL recently, we can see that there's been a decent run and a breakout. Maybe TI could also have some sort of action coming in. But yeah, there's the same thought process that it's too early to call anything right now. It's just the time to stay in cash, enjoy your time off from the markets. We've made good money in this uprun. Now let's consolidate, let's take our time, let the strong sectors come out to you on their own, right? We don't need to go hide. We don't need to go finding those sectors. They'll come to us on their own. If we look at IPO stocks, Endofarm is not in here. Q Power is looking decent. Bellrise might form a setup with the way that the auto stocks are forming, but earnings are due in 3 days, so it's going to be a pass anyway. This is a little too beaten down. Blackbuck, decent, but let's see how it does. So the thought process is the same. It's too early. What a good setup is, I'll show you what's a good setup. So Moil, right? Moil over here was an amazing setup. You're going up, you're consolidating, you get earnings report, you're staying in for a day, and then you're hitting on an upper circuit. This is a good setup to study. Even over here, right? You're forming a cup, you're consolidating for some time. Metals were doing quite well here. Another one was Hind Copper, if I'm not wrong. Yeah, I personally traded this as well, right? You're getting a good move. So you can see how sectors will always set up together. So just focus on that. For now, I would say take the time off, take some time to go through the past 2 weeks, how you'll have done there, what could you all do better, etc. Another thing that I want to discuss is the market breadth. So we can see very clearly that the market breadth is taking a beaten in the 20%, in the percentage of stocks above the 20 SMA. We can see a very clear beating of these, and that's good. I wanted to fall a little more and then give me that uprun, and then we can make some more money. Till the time the 50 SMA does not fall a little more, like the percentage of stocks above the 50 SMA are not lesser, I think it'll be tough to find that good leg. So this gap down that has come is quite good. But what I wanted to notice is how is it possible that we are in 100% cash again right before the market gaps down, right? So it's good. We are on track. We are one with the market. We're in sync. Let's make sure that we capitalize on this and do it better again. The next time the market falls, we'll be out again, and we'll do it again and again, because that's the only way to be the best in the world. Make money when the markets are up and stay out when the markets are down. With that, I'll see you all next time. Thank you so much.